Well, good morning. Welcome to CPI. CPI is today. Well, it was at 8:30, and we are now just sitting here watching the market. We have a level right here that I'm currently watching. If we close this inversion, there is a decent probability that I'll take a short. Simply because it's our first fair value gap after CPI towards the low of CPI. I'm expecting it, honestly, to find some support here. We have some equal highs that are sitting right above it. I'm just wanting to share this before I kind of do my normal introduction because it's happening basically right now. With that, good morning. My name's Tyler. I'm going to be helping navigate you guys through the wild world of day trading futures, and today's going to be a fun one. We're going to have probably a lot of volatility. We're going to have to be very patient, very strategic in our trades, and it's going to be a good day. So let's go ahead, open in prayer, and let's rock and roll. Father, we honor you. Thank you for this ability to trade. Thank you for the wisdom that you've given us. I pray for divine wisdom, divine intervention, and divine understanding of the markets, Father. Thank you for your patience that you've given us. And I pray that you'd bless everyone a part of this stream. In Jesus' name, amen. Jonathan, good morning. Northern, Tony, Ted, and Epic, good morning, my friends. How are you? If you are looking to take your trading to the next level, you can use the code DTJ and use an Apex. You can use Apex. Apex is doing an 80% off sale, and you can check them out in the description. Look at the bounce from that level. That's what I was expecting price to do. I wasn't expecting price to fall through here quite yet. I was looking for it to do that bounce. What, Benjamin? Yes, I do. Here. Okay. Close the door, please. All right. So we are inside of this range, right? We're inside of the data candle from this high to this low, this high to this low. So really, that's really all of our analysis is within that. We've hit the previous week low up here and the daily fair value gap that was sitting right there. There's the daily fair value gap. I'll just bring that over. Do we get a bounce here or do we get a sell-off? That's the question. Do you gamble for the sell-off? Do you gamble for the bounce? We got 10 minutes before market opens. I think we could continue to go down. We got our bounce already. So the question is, do we get a second one? I'm willing to do a small short here to see if the market wants to sell off or continue that downtrend. What's up, Viking? How you doing, my friend? I'll post it right here, the trade that I take if I'm taking it. I don't know if it's going to give it to us. We now have a fair value gap right there. We got previous day high also sitting right here, so that can act as some resistance if it wants to continue. I'm going to have a bracket order for 20 handles, so it will be a 20 handle trade unless I decide to extend it. Outside of that, how's everybody's day going? You Viking past 250K accounts. Nice job. Way to go. Way to go. So neither the high or the low of the data candle has been tagged. And so the high looks way more intriguing than the low simply because it's a larger wick. However, we have some other liquidity down here that I may want to grab. I'm not saying we want to go short here, but I'm open to taking what the market gives us here. I like the idea of it selling off here, or continuing the sell-off. What's up? What SZND? Seasoned? Is that seasoned? Did I get that right? Is the 930 in play? I think so. I like shorts for the 930. Unless something crazy happened, then I would change that. I'm glad I got that seasoned. I had to look at it for a second. Did you try the trade copier I sent you? I have not tried it yet. Nope, not yet. Honestly, I haven't done anything with looking at my different accounts. Because I primarily do my funded accounts so much, I just haven't done it yet. And I think part of it is I don't want to spend another $300. But when I get to that point, I will be looking at that 100%. All right, I do like the close below this fair value gap. It's free, not the... Maybe we're talking about two different things. You're talking about the trade copier, right? I thought that was $300. This is why we wait for the close. This is why right there, it did not give it to us. That would have been a great place to potentially take a short or a quick short scalp. When you get those big injection candles, go short, you can get 10 handles pretty easily. What am I doing? I don't know what just happened. Forlord. the link I sent you the other day. Drop it again in here, and I'm going to put it, Viking, if you drop it in here, I'm going to put it in my notes. Put it in my notes. I may have gotten the wrong one. Actually, you can't drop it in here because Google, YouTube doesn't allow links to be dropped inside of the chat. So go to my X profile and send me a message. That's the best way for me to get it. And then I save all those messages. I get all kinds of messages, random messages, and even those, if it's a legitimate message, I save it or respond to it. Well, we got 4 minutes. I'm not going to take a trade before that. I'm going to use the restroom. I think I'm going to stretch my my 930 model to 20 handles for today. If it goes in our direction, it will easily give us that much. Just with the volatility, I'm not. We'll see if we're gonna take it. I like us coming back up into this level here. However, if we decide to pump through this level, I'm probably not going to take it. I need to see it continue sell off here. We also have equal highs. I don't like that, Ted. I don't like the equal highs. The probability for a discount opening range gap gives us a probability of like a 70% chance. So we'll see if we can get 20 out of this. I don't take these ones on screen. All right, that gave us 20. I'm out. Reason I don't take that one on screen, folks, is because of I've shared this inside of the Purpose Driven Trader Academy, and I share the details and the specifics on the trade inside there, and it's not fair for those that have and are a part of it. So I don't take that one particularly on screen. But that was a nice trade. Ted, did you take that? Viking, the 930 model, is, in short, a trade that has about a 70% win rate. It gets a little bit higher when you start understanding order flow. I really want these equal highs to be tagged, and you could take. I'd be interested in seeing how we react to that. We could run all the way up to this high, the data highs. All right, see how we tap that high and it gives us easily. It gives us, look at that reaction. It gave us 10 handles. These are the type of scalp trades that I take that I'll be teaching more on because I'm becoming more comfortable with them. And I thought before it was more of me gambling, but when I started seeing the consistency of it, it's fairly consistent. Let's see. Got the 930 mother. Awesome, Northern. Yeah, way to go. No, I saw the bullish structure and didn't want to run against. Yeah, Dead. I'm the same way. But when it's for the bearish 930, I will take it almost every time just because it's, unless we actually swept liquidity. Now, if we like swept down here, I probably would have taken it. Wouldn't have taken it, but it was bullish. So overall, I would say you are correct in that assessment. We did and have gone up to these equal highs. It was those equal highs that had me question it, but the 930 model for you, Viking, is basically it gives you a win as you're learning day trading, because day trading is way more than people think it to be. And I want to give quick, easy wins to traders as they're going through the course material, as they're going through the Purpose Driven Trader Academy, and just growing as a trader. So that's kind of the idea behind that. All right, so there's the equal highs that were ran through. We also ran through the last inversion. My guess is we're going to go for these data highs. So I can probably say that with some confidence that we're going to try to reach for those. But when you get in is the hard part. How to get in is the hard part. I'm going to take a long. And see if we can reach up to it. If we close red, then I'm going to close. I'll close the trade. 16 seconds. There's a rebalance right there. Oh, yeah. Yeah, the return of that candle gives me some confidence that we're going to probably run that high. But do I want to take a loss? I don't. I don't want it to go lower, so I'm just going to sit and wait. I don't need it. I'd rather take something more structured. If we can close above this down close candle, that would give me some confidence. But if we can't, then we could just get a little bit deeper retracement. That is that's Viking. That's part of the criteria inside the Purpose Driven Trader Academy. I'll eventually share it. It's just not now. Not going to share it now. I've shared some other ones. Ted pointed out that the 3 p.m. reversal played out yesterday. The 3 p.m. reversal played out nicely yesterday. It's the secret model from ICT that he didn't ever shared, that he commented back on like February 1st, February 29th, or January 29th, somewhere around there. He did a video on an execution and the trade played out, and he said he wasn't going to share the model, and I think I figured it out. And it played out again yesterday. Very nicely. No liquidity here, no fair value gaps. Really, our interest is with the sell side right here, but we just reached for this order block right here. Let's see if it gives us a fair value gap right there. Oh, seasoned. Yes, I have videos on fair value gaps. 100%. All right, we're going to wait for this data high to be ran. I think it should run it right around here, to be honest. But it ain't looking pretty how it's getting up there. She's struggling to go higher. Yeah, that's right. Let's see, do we have 5 minute? Still got a few minutes. Do we got any more news? Wednesday. No, we really don't. Okay. There's not much here, guys. Not much right here, right now. We have a little bit of a breaker, but I don't know if I want to go with for a breaker at this point. I may actually look at taking this short. I'm not going to take a breaker on this when we have data highs right there. We got to sit here and be patient. No, Epic, I haven't had the course that long to have that data. So if I'm honest with you, I don't have that. I wish I did. But it would be too early in just my not journey, but in the course's life. It's only been here for a few months, and trading can take years to learn. And my goal is to help shorten that time frame. I just don't have that. I don't have those testimonies yet, if I'm honest. If you're looking for something that fills in the gaps, I promise you that this will. It does fill in those gaps. So there's a breaker right there, but I'm not. I'll rather take the inversion. We respected the previous week low. The bodies all respected and stayed underneath the previous week low. ES took data low. That's probably some good information. We don't have a 5-minute change in state of delivery yet. We still have this candle here, so it still could go long. I took a quick scalp on this trade right here. It didn't. It closed below it, but it already grabbed the liquidity right here. So if you were to wait for the close of it, it wasn't going to give it. But I ended up taking just for a 20 handle scalp. But I think because of that, I think we could probably run lower now. If it gives us a retest of this level right here, I may use that as an opportunity to go short. It's also a breaker right here, right in line with that midpoint. We'll do a small size here. All right, let's see if it wants to, or if it's going to push through this. I'm not sure if we're going to run lower. This is part of a data low model. Is once you run the fair value gap, you hold it to the low. So this is part of playing a part of that entry, but we'll see if it actually wants to give it to us. So this is a legitimate trade. Not sure if it's going to do it though. It could reach back up to that breaker. Come on. I'm going to close that. I'm not liking it. It's too aggressive on the candles, so we're going to sit. I hate that we have the data high above us and a data high below us. That's kind of messing up the draw on liquidity in my eyes, because I can see the draw on liquidity both being the high and the low. This is making it a little more difficult. So it is rolling over, but I'm getting second thoughts on, is it going to the high or low? So I got to sit out until I have clarity. JB, that is not in there. I did a post on it. That trade came from Dodgy D, and from what I looked at it, it started working out. This is actually, I take the trade before. Look, there it is. That's why, right there. I just felt like there's something happening. So Dodgy D has a trade called One Setup for Life. If you go to his channel, he'll talk about his One Setup for Life. I can talk about it here. But basically, when you have a data high and data low, look at that. Like, that to me is like, I'm going to see if this wants to run low right here. You don't have a giant candle like that in it. I'll take this loss if it goes. I'm willing to take this loss. Yeah, I'm fine with that. The data high and data low is this candle right here and this candle right here. So when you have the data high and data low on the 1 minute candle, as soon as one is taken, you target the other. And you take the trade based on an inversion fair value gap. So that would be in this case right here. Now, the reason why I was willing to take that short is because when you have that first fair value gap, as you see right here, we ran into the previous week low as resistance. So my idea is, well, this may be the data low we're running from. And when we got this candle and we lost it and we closed red, to me, that was a reason for us to consider this short. So in the short answer is, though, when you have this data high, and I could show you several examples, when you have this data high, typically the next candle is going to wick above it, and then it starts doing this. Well, in that process, there's usually a fair value gap like this gray run here, and as soon as it closes below it, you take it towards the data low. I took this trade here a couple days ago. It was for NFP. It's on my Twitter account. It gave us about 50 handles. I took it on Twitter. I showed you on Twitter. And you can see that there. But I haven't talked about it in the Academy. Actually, I probably should. I'll reference where it came from. The volatility is just too much. I mean, we're going back and forth, and I'm done. I'm done trying to participate in this move. It looks as if it's going to go that way, but I'm just not going to risk my capital anymore for it. It's just not easily running there, and it should easily run there, not just have so much resistance. Every time we've gone lower, we've retraced. Like once we made this low right here, we should have ran all the way down here. But instead, what did we do? We ran up 93 handles. 93 handles for a retracement. That's just insane. You can't participate in that crap. To me, this should run right now. It should just drop straight there. Just how many times I've seen it, it should just drop. But we've seen retracement after retracement. And that's making this significantly more difficult. You see that? I mean, why haven't we hit it yet? You stop a tick before. So Tyler, data high and low is overly flush candles on the 1 minute. Is the overly flush candle? It's that candle. It's the big one. Data high and data low. 8:30 news came out. So the reason why we call this the data is because data came out on this candle. 8:30. And today it was CPI. So CPI news, which is the title of today's stream, was the news candle at 8:30. That's what happened. Now you see this? This is what I'm talking about. Like that, people are being burned today. All right, I want to see if this wants to run down here, maybe at least hit the data low and come and grab this the midpoint of the opening range gap. So that's kind of what we're looking for, to see if it wants to expand that low. We came back up into this order block. Let's just see if it's going to continue that trend here. Open the floodgates of heaven. Let it rain. Let it rain. see. Yeah, that 5-minute candle isn't very helpful, is it? That's what I'm talking about. Like, I'm a little irritated. I mean, this played out nicely. But, I mean, in what reality are you going to, let's just say you went short right here. What reality are you going to hold through a 62 retracement, 62 handle retracement? $48 handle retracement. Heck of a wick right there. Okay, so now that we've hit this level, the only thing left we have is the data highs, and it goes in line with our bias that we are going to push higher since we had such a sell-off the past 2 weeks. So I think if you want to be able to trade this, folks, I think we need to reduce down to even just a single micro. If you're wanting to trade this without feeling the feeling of blowing your account, because the volatility on this is just, it's insane. This is insane volatility. Do we have a long entry? Now it's not going to give us any retracements. Do you see that? The only thing I see right here is this right there. Is a potential breaker point right here. And then we have this inversion right here. So only 2 entry points that I potentially see us taking is right there. I will hold this, I'll put this on my screen if I take something here. On the 60-minute, on the hourly, we have a sweep of liquidity from 9 a.m. to 10 a.m. So if we can get a 5-minute fair value gap on any of this push here, a retracement into that 5-minute would give us a long. That would be our only option. We can see how this fair value gap reacts here. This follows all my rules. We have a sweep of liquidity here. It didn't tag us in, so there's no entry there. The only thing that it's not giving us is a market structure shift, which because of this candle, we don't have it. So technically we don't have a market structure shift. But just knowing the narrative of price, we swept the data lows and aggressively began to move the other direction. Tells me that we are probably running for the data high. The question is, how do we get in to participate? For my rules, I would want to see this high taken for a market structure shift. That's a market structure shift. Where is it? And then I would want to see it come back down into this breaker sitting here. Now everything has been sloppy and messy that we may not grab this market structure shift. We may come back down into this breaker and then we could see that continuation. So that's option one. Option two is we have this inversion that hasn't been closed above the previous week low, that we can take that as our long towards the highs. Now, since if we close above this without a significant retracement, I'm not as interested in taking it. Simply because we have price action that isn't efficiently delivered. We need sell side liquidity or sell side delivery back into some realm or to some level. And then, so if we get a retracement here and then a close, I'm more interested. If we close straight above it, to me, that seems more risky to take. The executions on today is not easy. What I will take is a reaction right here and see if we can at least get 20 points. I'm willing to take that, or 10 handles like that right there. Did it put it? Okay, so it gave me the entry. Let's see if it gives us 10 handles or 20 handles on that reaction. And it's not. That has a better chance to stop me out here. And if it does this, I'm probably going to be done because it's not worth trading. It's not worth trading. This is just horrible. So you guys saw that. You saw a loss. I'm closing my accounts because I'm not going to trade this right now. Price action, I'm not liking it. It's not predictable. I'm logged out and I'm going to tape read. I'm not trading this anymore. Villainous, I don't know if the market's short. I don't think so. We're in the macro right now. Or my macro. Mine is from the 15 minutes before to 15 minutes after. Either way, I'm not messing around with it because I've read that. I mean, I've read it correctly. The volatility of this has wicked me out 2 times. We'll see if this wants to find the support that I expect it to have. But these wicks are just, that's a 20 handle wick. And I got in the middle of this fair value gap. If I'm honest with you guys, the volatility that we've been seeing the past 2 weeks has really messed with my trading. Primarily the wicks. All of these wicks and the how volatile these candles are, the size of these candles, has really messed with my trading. I'm not going to lie. It's been very frustrating lately. Simply because while the trade is playing out, it's from all my back testing that I've done, from everything that I've worked on, 10 to 20 handles is all that you needed for a proper stop loss to allow your trade to breathe. Well, lately you can't get by with 20 handles unless you get like a perfect entry. And ICT and everybody that I talk with, the entry isn't as important as making sure you're on the right side of the trade, right? If you're on the right side of the trade, it will come back in your direction. But when even lately, when we've been on the right side of the trade, is that these wicks have been so large that it's still stopped me out. So I'm not going to trade right now. It's just too much, personally. And I'm just being real with you folks. That's just where it's at for me right now. Yeah, for the most part, it will run the low and then the high, or the high then the low. But there are few times, I would say less than 25% of the time, will it only run one and then continue that direction. So in this case, let's just assume that price is not going to run for the data high. It makes the candle, it runs the low, and then it continues lower. Right? That is a lower percentage of the time. So when you run the data low, it's reasonable to take a breaker to the upside. It's reasonable to take the inversion to the upside because the probability of it running both the high and low, just go back and look at all the data candles. You will see the high and low run 75, 80% of the time. JB, you can take smaller scalps, 100%. But then what you're exercising is lack of patience at the same time. So we can take scalps. So if I was to take a scalp, the scalp idea would be, well, it looks as if we want to run lower. So when we make a green candle, you'd go short. And you scalp 5 to 10 handles. Or excuse me, 10 to 20 handles. But the problem with that right now is the volatility is so high that this candle alone could just wick you out before it actually shows you anything. That's 30 handles there. So I don't think scalping is, so like that would have been an entry right there. So it pushes higher. I'm on a paper account. So you push higher like that, but then you get something like this. And then you just take a 10 handle win. But the problem is the volatility of these candles are so big that it doesn't make sense for you to do that, because then this can happen. So see how that's just, it doesn't make sense right now to do that. This is a paper account. I was using this for an example. So if you can understand that we are in seek and destroy conditions, because that's really what we are doing right now, you can potentially scalp, but it's better to stick with a specific model and leave scalping alone until you really understand order flow. And there are even days when order flow is just so seek and destroy-ish that it can hurt you even when you're scalping. Now Northern may have the edge on this. Sounds like he does. He's been going down to the 30 second levels. So like you can take these key levels like this, and you can take a short when it hits key levels. So here would be a level, and that's exactly what I tried to do right here on the breaker, but it ran right through it. So it will work, and then sometimes it won't. So you have another liquidity point right here. So the idea would be you could go short right there as soon as it grabs that liquidity, if it gets up there. Grabs that liquidity and it gives you 10 handles. I think that's what it would be. If it gives it to you. I can just tell you I don't want to mess around. I'm done messing around with what I've been seeing. There's nothing remotely attractive, and I'm just going to exercise discipline and sit out. when you're in an environment like this, scalping is much harder because you don't know which direction it wants to go. If I know that truly the draw on liquidity is down here, it's a lot easier for me to take scalps. It's a lot easier to take scalps. See, on a seek and destroy, this would be a long right here. As soon as it wicks that low, you would take a long. But I think it could run lower. So you just sit out. Like this candle that just... David, everyone has a different opinion about what scalping is, but these are actually perfect conditions for scalping. Well, I hope you're making money then. This is a 30-second chart right here. And I've scalped plenty of times. I'm just not liking what I see for a scalp. Yeah, you're referring to this right here, right? The area that I have found the most consistency in scalping is after we grab liquidity to go for 10 handles. So it wicks above a high, you go the opposite direction for just 10 handles, and it will typically print it. There's 17 right there. So whether it's a fair value gap, a swing high, an order block, a breaker, you do basically, when you hit those key PD arrays, I go the opposite direction for 5 or for 10 handles. But I really haven't taught scalping on here, on this channel at all. $15-minute is finding support inside this 15-minute fair value gap. So we got relatively equal lows down here. To me, going long while this is sitting right here is not attractive. This is going short with these equal lows is more attractive than trying to go long. And if we're looking at the market, ES looks heavy, so I'd rather go short anyway. Northern, that's I agree with you. Hitting your goal and walking away, or keep into within an hour. So we got our, did I mark out here? Okay, if we're going to continue lower, we have a London low down here. We have our previous day low and our new day opening gap sitting here. We have already ran the previous day high. Oh no, that's equilibrium, I should say. Sorry about that. This is the wick. So if we can't stay above this wick, we may see price run down to the lows. I mean, consider the signatures and price. This made equal highs instead of a higher high. If this swept liquidity like we came into this fair value gap and then started displacing, that would have been more attractive to take a short. But because we made equal highs, I'm not interested in participating when there's equal highs like that. It's just not attractive to me. What I'm thinking is that the PM session is probably going to be better trading. So it might be worth, well, I'm done. I'm not taking any trades. But it may be worth coming back in the PM session. I do want to show you guys the 3 p.m. reversal that happened yesterday. It played out nicely. I wasn't on screen to be able to take it. But this is what I've been researching from ICT, that I started seeing the patterns in price. So this run right here, this run is really spooling of price. Now the reason why I'm calling this, ICT calls it spooling, and the question you need to ask yourself is, why is this considered spooling and let's say this isn't? When you look at the characteristics of this compared to this, it's very intentional. Price is moving in a direction that is very obvious and very clear. Only 2 red candles before it hit the previous day high. Or no, this was the previous day high. Before it hit the daily fair value gap. Or it's the one that created it. So it just made a high. So before we kept going, we had the high already here. So this was the current day's high. But what happened is between 2 and 3 p.m., we have a spooling of price that's very obvious. And so when we create a high in the 3 p.m. macro between 2:45 and 3:15, what I'm looking for is the first inversion to take place. When you see an inversion, the rule is the high is set. There will not be a higher high taken. The high of the day is set as soon as an inversion is taken place during the 3 p.m. macro, followed by spooling of price. So we have spooling of price clearly beginning inside the 2 p.m. hour. It can start as early as 2 p.m. and as late as 2:30 for the most part, but it spools higher. It runs the current day high and continues that way. And as soon as we see a retracement or an inversion inside the 3 p.m. macro, we are looking for a short. So this would be our short entry right there. Oops. This would be our short entry right here. You would put your stop loss at the high and you target a 1-to-1 risk to reward or 1-to-2. So if you did a 1-to-2 risk to reward, this would have been your target right here. And you can see that it ran all the way down 81 handles. I've backtested this on probably a dozen or so instances where this has taken place, because it doesn't happen every day. It doesn't happen every day. But when it does, when you get that inversion in the 3 p.m. macro, it's a reversal. So you can see how price looked like it was going to run and go higher, but it stopped. Where did it stop? Stopped right at the midpoint of the wick. The last PD array to prevent it from going higher. And then it sells off even more into the close. Look at the sell-off from this candle. So this is something that I've been able to participate in this trade once since I came across it back in February. But every time it's presented itself, it has worked out. It is played out. So from my personal trading experience, it's played out 100% of the time. It's never going to have a 100% win rate. But so characteristics of the 3 p.m. reversal is spooling of price towards the high or low, a high taken in the macro, followed by an inversion. When that inversion takes place, your entry, you go for 1 to 2 R, 1 to 1 or 1 to 2 for your target. And you could hold it longer, but I probably would just go in case that it does in fact go higher. But every time that I've seen this play out, or every time I've seen this in price action, it's played out. So I wanted to touch on that here today because that was a great trade that we weren't able to participate in yesterday, or I wasn't on screen when that happened. Current sell side is way down here, so we have a lot of range. We have all of this that we can sit in. Tony, I don't understand. Almost one time framing? What do you mean by that? Looking at the charts, we just ran these relatively equal lows that were sitting right here. To me, this is a minor buy side or minor sell side. The real interest is it going to want to come down to equilibrium? So the equilibrium of the previous day's range is sitting right here. Right in line with the London low, previous day equilibrium, and the new day opening gap. Repeated higher high candles when spooling up. Yeah, just the 1 minute time frame. And it doesn't need to take sell side. No. The only thing you have to keep an eye on, watch, is the spooling of price. If it's not spooling higher and you get a methodical, okay, so when you have the spooling of price, it doesn't disrespect any PD arrays. That's the key. I would probably, if I had to put language to it, it finds support at every discount PD array. So here's a discount PD array, an order block. Here's a discount PD array, a BISI, a fair value gap. We don't disrespect any discount PD arrays until the inversion. As soon as we have the inversion, we've disrespected a discount PD array, and that is the idea. So when you see spooling of price, it needs to not disrespect any PD arrays as it's moving higher. If you get price like this, that's moving lower towards the low of day, well, you can see that it had an inversion here. The inversion was violated. The breaker was respected, but you see consolidation. So you don't want to see any type of consolidation. You don't want to see any PD arrays violated, and it needs to be very directional. When you see this signature, this is the signature in price. When you see that, that is a clear sign, especially when it makes that high and gives you the inversion, that the day's high is set. That's just what I found. I've tried to get to see if ICT will respond and give us tell me if I'm on the right track. But honestly, I really don't care at this point because it's worked out several times. Going back and looking at the decisions that I made today, sitting in hindsight, evaluating my trades and my decision making. When I'm looking at price, post price action, things look not horrible, but for example, we have a breaker here and it moves in our direction. Why didn't I take this? Because we had data highs. That was the main reason. The data high and the data low being here unran. I would say this is the first time I've dealt with this in a way where it created confusion in my trading on what direction we're going to go. That made it significantly more difficult. Because you can see that we respected this level, this inversion right here, and we moved higher. I'm thinking we're hitting this level. So when we sell off, I'm looking as just a quick purge of liquidity for a continuation back to this level. And then from here, that's when I wanted to look for the sell-offs, if we were going to get it. But not only did we not get that, we ran the low, then we faked as if we were going to go the other direction, respected the breaker again, and then sold off through the data low again. This was very difficult. This was a difficult day for me. Not my best day on reading price action. Very frustrating. It's almost somewhat humiliating. But I know it happens to everybody, and it's just, I can't let that thought linger because it's not true. There's going to be good days and bad days. Even the trade that I took right here from this candle, remember when that wicked up here and then I went short right here? I went short right there because of it hit this breaker. It ran up into this level, but this candle wicked me out. I got in right around the opening price. And it wicked up 33 handles. So it's just trades like that that make things frustrating, because I was on side, I saw the breaker, I saw the structure of order flow where it was going, and I got wicked out here. And then it runs basically to target minus a tick or two. Alki, how you doing, my friend? There's no trading here, guys. I'm not. You gotta be. There's nothing here. We're in the macro period for 11 a.m. You can see if it wants to give us something. But I'm not interested in anything. I did buy some stocks in Tesla yesterday. Let's see, where are we at? I bought some stocks when it was down here. I figured, you know what? It could run this. It could run these lows here, and it probably will. But if it does, I might grab some more. But I wanted to get it. I basically got it on this purge day right here, when we had that big sell-off on the market. That's when I just grabbed some. I don't think it's a bad idea. At all. If you guys take a look at this price action, there's not a single fair value gap in any of this. Okay? Nothing that we want to participate in here. This would be an example of a scalp that I would take right here. So I would go short like as soon as we run those highs right there, or the daily wick, those levels, and look for just a 10 handle scalp for the retracement, especially on the volatility for this. We got an SMT. I'm learning, Tony, if you're going to look at SMTs, I haven't done a ton with SMTs, but what I've come to realize is that the SMT is more valuable inside of a PD array. Is this equal lows the PD array of significance? I don't know. With what we've seen in price action, it's just not as attractive. But if we were at a breaker or we were at an order block on, the 15-minute time frame where price, in this case, did it wick the low? Because if it did wick the low, that would make things nice. If it did not, 15-minute. I don't think it did. That's too smooth. So to me, I think we need to run a little bit lower if we're going to see some type of reversal. Now remember what I said about doing a scalp from this level here? I didn't take it because I'm not trading. I don't disagree with you, David. The question is, how do you get down? How do we get down there, and where the entry point is? So a sell-off like this, what I would be looking for is some type of retracement with an inversion, or an order block to be put in, and then you use that order block as an entry point as well for a continuation down to midnight open, equilibrium, London low. Yeah, I don't know if you'd want to be long, Tony. All right, I want to look at this real quick. I bet you that would have been a nice 5-minute entry. All right, so here is the model. Let's see if it played out. Yeah, it played out. Here is the model that we didn't get an entry here during the New York session, but here's the 1-hour reverse model that I've been watching and backtesting. And it looks really nice. It's a 3-candle pattern. I got this from a collection of different traders. And it is a 3-candle pattern on the hourly time frame. So you got candle 1. You got candle 1, candle 2, and then candle 3. So it's Wednesday, 2 a.m., 3 a.m., and 4 a.m. hourly candles. The first candle, we want to see a low placed followed by the second candle. In the second candle, we want two things to happen. We want the sweep of liquidity, and we want a 5-minute change in state of delivery. So I'm going to put a box around these three candles so we can go down to that price action on the 5-minute. All right, so here's the 5-minute time frame and all the price action within it. So we see the sell-off right here. We have 3 a.m. right there. So after 3 a.m., we are looking for a low to take place during the 3 a.m. hour. So we can see we have our low at 255, and we see the low taken at 310, 305, 310, all right here. Next thing we're looking for is once that low is put in, we're looking for a 5-minute change in state of delivery in that 3 p.m. hour. 3 a.m. hour. So we have our 3 a.m. change in state of delivery on the 5-minute time frame right there. 5-minute change in state of delivery, we see the expansion. Now, you could take this if you thought this was the low, but if you want the secondary confirmation, in the 4 a.m. trading hour, you're looking for price to retrace down into a 5-minute fair value gap. So we have 3 of them right here. We have 1, 2, and 3. This is where some discretion takes place. The long is taken inside the first 5-minute fair value gap in the 4 a.m. during the third candle. During that third candle, you're looking for the long inside that 5-minute. Now, as you can see here, technically we disrespect this 5-minute candle, but we wick the bodies close above the other 2 5-minute fair value gaps. So you could say, well, I would want it to run a little bit further, maybe come closer to midpoint of that range. So that would be this red line right here. But the entry is right at that first fair value gap, and then you target 1R. So 1R from this trade, from your entry. Excuse me, let me delete that. One R from the retracement. So your target would be, as you can see right here, look at that, how it wicked it to the tick. So we have this range right here, and it runs all the way up to that candle right there. So this candle's high is 19,567.25. And this candle, this one standard deviation is 566.75. So it went above it by 1 point. So it's a 1 hour reversal, 3 candles, 1, 2, 3. Taking the long in a 5-minute inversion or 5-minute fair value gap in the third candle. Hey Victor, how you doing, my friend? I got chopped up in between the data high and low. Not the best day for me today. We have the data high right here, and we have the data low right here. We attempted to go long. We attempted to go short. We attempted to go short. Just wasn't the best day. The wicks were gigantic today. So, not the best day for me. Started out great with the 930 model. I should have ended there. Folks, I think I'm going to call it a day. We're going to call it a day here. So, we'll be back tomorrow morning, 9:15, New York time. Price is probably going to run for London low, is my guess. That's where I think price is probably going. So, we're going to call it a day there, folks. God bless. Stay safe, and we will see you all tomorrow. Take care. Bye-bye.